Stock markets wait on every single word of the Fed. We can plot this on a chart. Watch the violent swings occur from suggestions of a future action. This is when you know there's nothing left but a dream. Do not be swayed by the volatility. Stay the course. You came here for the truth, so let me unveil that for you. Today we're going to talk about the Fed president warning against raising interest rates. And this is funny because only a few months ago, things were a little bit different. Let's begin with these two articles here out of CNBC, beginning with this one where we're talking about flipping homes. Flipping homes is great. It's amazing until it gets flipped on its head. That's right. House flipping is always hottest when the home prices are nearing a peak. They say, no, that's not the case right now, but there are some exceptions, and that is Las Vegas and Miami. Does that sound familiar? Well, they should. These two markets have been the poster child for the flip trade during the last housing boom, and they paid dearly for it. They say that the homes lost more than half their value. All I wanted to note is that we saw millions, literally millions of homes empty after this housing boom. That's how fast they believe that these homes needed to be built, because people were buying them and just letting them sit empty, thinking that eventually somebody would buy it up from them and they would profit big time. But that is not the case. And at the peak is when you have the most delusion. That seems to be happening yet again in real estate in many markets around the world. Let's turn to this here. Citigroup, which one of the bigger banks here, gave their chief executive a pay increase of 27% in 2015, a year in which the bank's profits more than doubled. How does a bank get to profit so dramatically to actually double its profit in a year? Well, they take bailout money, or perhaps those who didn't get much bailout money, they have to use their ingenuity, and that is you get the alumni from your corporation to work in the public sector, to work for the government, so that you can create favorable laws. You can have them lobby the people who are putting these laws into place and have them essentially create laws which benefit corporations like Citigroup. It works very well. You don't have to get a bailout necessarily directly, but most of these corporations pay no to little tax. They keep all their profits offshore. They've got it made. So enjoy the 27% bonus. One of the U.S. Federal Reserve's most prominent advocates of higher interest rates on Wednesday declared it, quote, unwise to move any further in light of weak inflation and global volatility, suggesting the Fed is stepping further away from plans to continue to hike rates. So we have this Fed President, James Bullard. He said previously that they would steadily increase the interest rates, have this continue, but now he's sounding the alarms over the risks that continued low rates would create dangerous asset bubbles. So this is previously. And essentially what we have is a flip-flopping of the ideals. They had to increase rates in the December timeframe because of this sad and sorry attempt to save face. That didn't work. Obviously, nobody believes it for a second, but the markets, the investors, the hedge funds, and everyone else are absolutely dying for low interest rates. It's not like they're asking for interest rates to be increased. None of them want that. But now they're realizing that we need to decrease rates, if anything. So this is what's changing over time. Wednesday, he said that the steady drop in the U.S. inflation expectations is now chief worries for his, and that he will not be comfortable with further hikes until the trend reverses. What does this tell you about the reality of the markets? They're not doing good. No matter who says that, no matter who has this dream in their mind, they're not going to get around reality. Let's move into this, what I wrote about in my book, talking about interest rates. I have a chapter, in fact, about it. Rising interest rates will mean slower growth in the economy because less people are borrowing money and spending. Governments would have to pay more on the interest payments on their national debt, resulting in increased taxes. Ben Bernanke, everyone knows Helicopter Ben, he said that a loss of investor confidence could potentially raise rates quite significantly. This would make it harder to reduce the deficit. All very interesting points here. Let's move on to this. Hong Kong land price plunges nearly 70% in this government tender. And the latest sign that Hong Kong's property correction is deepening, a parcel of land sold by the government in the new territories went for nearly 70% less per square foot than a similar transaction in September. Anything that drops by 70% is considered a major crash. So look at this and understand things aren't looking pretty. And it's not the US, it's not Vegas and Miami. It's all over the world that are being affected by this. It is a globalized world. China total social financing, 520 billion they're highlighting there. A maximum series here that's going on of debt. That's what this is. You need to understand that the government sectors all around the world are encountering the same problems. This is just yet another example. China's AAA corporate bond yield and the Shanghai Composite Stock Index, basically trying to show you the disparity that's been created. Whenever you see this formation in a chart, for those who aren't really familiar with the charts, whenever you see this formation, this is the run and hide formation, okay? You call it whatever you want. This is the Pac-Man. Think about that. I think about basically, I think about running and hiding. That's the way I see it. This is not good. When you have stock markets that, move independently, but ultimately they sort of track each other. And then when you have this schism, this chasm that forms in between, there's a big problem. So watch out as this continues on. Of course, I'll cover it here. The debt to GDP ratio is an important indicator, even though the debt is fake and the GDP is fake. But it goes to show you that with fake numbers, how bad can things really be? So look at this. China's debt reached 282% of GDP in 2014, higher than debt levels in some advanced economies. And they break it down: government, financial, households, non-financial, corporate, showing you all the different breakdown here. Very important to look at this, compare it with the other countries, and see which sectors hold the most amount of debt. You could see in the United States that government debt makes up a very large portion. Canada's on there, Germany, Australia, South Korea. There's a whole bunch of examples there depending on where you're from. This might give you an idea of what's going on. Understand that debt cannot be paid off at these levels. It's fake. It's all fictional at this point because there's no way for there to ever be recuperation from this madness. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my book, The Money GPS, even more informative. If you head over to Amazon, you can check out the Look Inside feature, which will allow you to flip through the pages of the book to see if you like it. Take care. And if you're still here, I just wanted to ask, and this is something I've been curious about. What do you think about the Money GPS YouTube channel? I'm curious to know. What do you tune in to the Money GPS YouTube channel for? Are you trying to get your daily updates here? Are you trying to look here for historical information? Are you trying to look because you know it's your first time coming to the channel? You're curious what it's all about. You saw the video. How did you come here? Did you watch a different YouTube video and found my channel? I'm interested in hearing everything, and just please let me know. It's very important to me. I'm trying to get more in tune with what the subscribers want to hear. I do see your comments all the time, and I believe I'm on the right track, but let me hear what you're thinking. Take care.